Should we buy or sell the South Korea ETF? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So here is South Korea. I categorize it as North Asia. It is 3.45% from the 52-week low, and we are in a minus 27% bear market. So it's pretty, significant. This is the big picture. All the data we get about this ETF, so we can make a pretty darn, informed decision. So we are using weekly data points. So we can see that the red 200 week moving average throughout the history of this ETF, it's been a big deal. So let's draw a bit here. Yeah, let's ignore this. Okay, so let's get our drawing tools out and have some art lessons. Because you can see that, the 200-week moving average is being such a clear level. Sometimes the rejection or the support has been literally surgical. So it has been support, as you can see with the blue arrows, but it has also been resistance. And this is back here in the previous, major bear market, during the global financial crisis. So when we, fast forward a bit, here you can see the 200-week becomes support, big rally. Here we go through a bit of more of a noisy period, but you can see that the 200-week came back here to become key resistance, and after that it became key support. Nice support, buy, and you go up, resistance, support, huge rally, and now we are approaching our current time. So let's just zoom, like this, and then we get our drawing tool. So it is pretty clear that this moving average, it's a very big deal. It's been a big deal throughout the history of this ETF. So this relationship here between price and this moving average, it is not random. There's something here. Maybe it's some big mutual funds using it, sovereign wealth funds. It doesn't really matter why it works as much as it actually working. So we are currently at that support level. So technically speaking, what we have is very interesting, and that is from a bullish perspective. So even though the market did go down on this last candlestick, it is interesting that the bears were not able to actually break this support level. So far, I'm leaning a bit bullish. Looking at the daily data points, that's when it's not that pretty. We are literally below 100% of these moving averages, so this is just not bullish. Looking way back, you could make some case that we have something that looks horizontal support-ish. So let me draw that in. So you have some support back here, and even possible support from way back here in 2018. So yeah, there's that. Let's now look at these other indicators, but to be perfectly clear, the key event now is definitively this red 200-week moving average. Looking at the MACD, we are at an extremely low level, so abnormally bearish sentiment. Looking at RSI, we are in a low level that we usually are above this level. Same with many of these PPOs. Okay, daily data points. When we look at accumulation distribution and compare that to price action, there is a bullish divergence. There is some pretty significant inflow of money, notwithstanding this sell-off in price. So that's interesting. Of course, it doesn't really help those who bought here, that we have gone lower. But it is a bullish sign to see that there is inflow of money. It just is. But obviously, you do ideally also want to see a profit from your position as well. Looking at RSI and the PPOs, we are at interesting levels, but we are also at levels that are, well, we have been lower in the past. So there is some vulnerability here. It's not like a screaming buy when it comes to these indicators. So in terms of the laboratory, I think that the obvious key event now is 200 WMA support. It's a very clear level that has been very important as resistance as well in the past. I think I will give the benefit to the bulls here, given that we are already down big, bear market big. So I think I will give the bears some points that I will subtract, from the bulls. But I think the overall score I give here on the technicals is bullish. So let me give the bulls. I give them a 3. So even though the support level is very clean, I don't like that we very recently broke it. That does increase the odds that it could become a resistance, and we have seen that it has been a very magnificent resistance level in the past, and if it does become a resistance, then it will become a good short level. But I think I will lean a bit bullish here, but I certainly do understand also what the bears are seeing in this chart, because the bears are close to making a power move that could turn this from a significant bear market to a more dramatic bear. So let's look at the seasonality. So to the right here, we do have the average price action over the last 5 years here in green, 7 years in blue, and 10 years in red. And it is pretty clear that the average seasonality is bullish, heading across all these time frames, heading towards mid-June, and more broadly also towards later June. So that's bullish. Looking to the left, we do see that April over the last 5 years is a strong month. It closes higher 80% of the time. May is 50-50, but then June is a strong. Let's look at the last 10 years. Let me just draw it with the arrows. I think you can see it yourself that we do have some pretty clear increase in bullish strength overall, heading towards June. But the problem is May. Looking at the last 20 years, then April, which is the current month, it is the third strongest month for this ETF. So that's obviously bullish. But May is a problem, so it is possible that. So if you look here to the right, we see here that April usually is rather bullish. You see a rise in price. Then we usually see a bit of a sideways action in May, which certainly fits what we see here to the left. And then we see it in June. That is when you have that big last impulse rally until we do have that correction we usually see later. The thing is that we are in April, so I think I will give the bulls this one. I think I will give the bulls. So I don't like the price action in May because given that we are in this vulnerable position, the mediocre as nature of May, it could limit the inflow of money. So I think I'll actually give 3 here as well. Simply because the people who look at seasonality, they will put more money to work bullishly if you have multiple coming months in a row that are bullish. But when you have this setup where April, yes, is bullish, but then May is messy, then bulls would just put less money to work. Okay, next we look at fundamentals. I think it makes a lot of sense to compare South Korea to the S&P 500. So when we look here at performance year to date, South Korea is it is significantly underperforming the S&P 500. The beta is slightly lower, so that's some beneficial, but there's not like a huge difference. When we look at the price earnings, lower price earnings, 18 versus 22-ish. So let's do some quick math on that, like this. And like that. So the S&P 500 has a price earnings that is 20% higher. So there is more value here in South Korea. The dividend yield is mediocre, 0.8% versus 1.22% for the S&P. So there is a yield, but you are definitively not buying this one for the yield. So here are the companies. Samsung, huge. I have Samsung phones myself, pretty good phones. Then Apple is the king in the S&P 500, followed by Microsoft. So yeah, If we go a bit further down, in terms of the sector breakdown, you see that South Korea is heavily tilted towards electronic technology, and a significant portion of the revenue that these companies get, it is also from discretionary spending. So it's when you buy the more premium products. So yeah, that's something to be aware of. So there certainly is more balance here in the S&P 500, but tech is also big here. It's so you have tech services and electronic technology, so it sort of is split a bit. Then health technology is big here with 11-ish%. So yeah, both are very tech heavy. In terms of market cap, a bit more balance here for South Korea. So I think that the people who compare the S&P 500 America with South Korea, I think that those who are interested in fundamentals will see more value here in South Korea. The problem is that the dividend yield is smaller than the S&P, so the same kind of people that look for value in terms of price earnings, they also want dividend yield. So while I lean a bit bullish here on the fundamentals, I only really will give it to 1. In order to be really attract those fundamental analysts who look for that value, you also need to give them a decent dividend yield, and also frankly have less exposure to very discretionary spending. Okay, finally we will look at relative performance. Here I am comparing South Korea with America, 82% long-term correlation, then 50% with China, then we have 94% here with Japan through the EWY ETF, then minus 85% with the dollar index. Then we go to short-term correlations, 39% with the S&P 500, 83% with China, and then we have 93% here with Japan, minus 88-ish% with the dollar index. So the strongest correlation we do get is definitively with Japan. So what happens with the EWJ is very likely going to have an effect on South Korea. So when we look at Japan, we do have that very interesting moving average here as well. The red 200-week moving average was supportish, then it became a level where we were not able to attract buyers, then we rally, and then we do see that when we test it again, we just slice right through it. Then it becomes support, big rally, and now we have this situation where the 200-week is simply not acting as support. So that's a bit of an issue here in terms of the Japan ETF. So technically speaking, the bulls are going to have more difficulties buying this ETF. Looking at RSI and the PPOs, we are certainly in the lower end of those indicators, also the MACD. So some of the contrarians, they are going to be attracted to it. The problem is that we have, from a technical perspective, a key resistance level now above us in the form of the 200-week moving average. Looking at the daily data points, here again, we do see a divergence between price action, which has recently been going down here. So let's measure the fall. So in this period here, you see that we have fallen approaching 20%. Notwithstanding that, we have seen this steady inflow of money here in the accumulation distribution indicator. So that also goes to show you that you can't purely use that indicator as a signal to buy. Because there are, quite a few participants in the market that, we are talking about, sovereign wealth funds and mutual funds that are long only. So they will buy no matter what happens. They are almost like this buying nihilists. Okay, anyway, looking at the PPOs, RSI, we are low, but we are not like at lows that are so low that they are contrarian, like really bullish. So here is the relationship between South Korea and Japan. So it's sort of been a bit all over the place From a pattern perspective, you could make the case that this looks, it's not clean, but it is a bit inverse head and shoulder-ish. That is potentially a bullish setup. Let's look a bit here at the seasonality of this pair. So over the last 10 years in red, we do tend to see that South Korea outperforms Japan towards mid-June. In blue here over the last 7 years, the outperformance happens very quickly here towards April, and in green here over the last 5 years, the outperformance lasts towards later June. So we are coming towards a period where, South Korea tends to outperform Japan. So that's bullish. So it means that the people who buy these kinds of markets are more likely to push money into South Korea, which could help, form that, technical low. Let's compare the EWY with the S&P 500, which is the key benchmark. Yeah, so in terms of this relationship, we have seen a very long period of underperformance. So how long? So yeah, South Korea has underperformed the S&P here for a whopping 4,000 days. That's a long time of underperformance. So yeah, you could turn a bit contrarian based on that. Are there time cycles in this relationship? Maybe. Not clean. Let's look a bit here on the seasonality. Yeah, so there's not a huge surprise that the seasonality is not really that bullish. So over the last 10 years, you usually see underperformance. Over the last 7 years, usually some slight outperformance here in April. And over the last 5 years, it's a bit flattish. So I think that the score I will give here for relative performance is, I think I'll actually will give it a 4. I do think that it's interesting that we are heading towards a period where there tends to be some outperformance here for South Korea. So overall, we do end up with a score of 2.8. So the data is more supportive of bullish than bearish thesis. A key part, though, of any kind of bullish thesis here is that the 200 weekly moving average support, it definitively should hold given all of this data. If it does not hold and it becomes resistance, that obviously is something that is going to substantially embolden the bears. And we do not want the bears to get emboldened in this situation. Whatever you do, of course, you want to use stops and be market neutral. And go to DiamondArm.com and become a VIP member.